Hello, everybody. Thank you for joining me today to talk about benchmarking for success. My name is Josh Lance. I'm the managing director of Lance CPA Group, and I'm excited to talk about this topic. I think this is a very worthwhile topic, particularly with everything going on today in this day and age, with regards to understanding the data in your brewery better and making better decisions as a result here. So a little bit about the agenda first as we kick into this, and then we'll start diving in. We're going to kind of talk about benchmarking and the importance of data in the brewery, understanding where those sources of data are coming from, and then taking a look at some benchmark data here that is fresh as of June 30th, 2020, and look at kind of the state of the industry around that, especially in light of everything with COVID, and then kind of what do we do now at that point in time. Just a little bit about us. Lance CPA Group is a firm that is a virtual and remote CPA practice that specializes in working with craft breweries. We've been around for almost 6 years now, and we work with craft breweries across the United States. I'm based in Chicago. Our team is based throughout the United States, and we work with breweries throughout the United States. We provide accounting, tax, advisory services to our craft breweries. So we do everything from monthly bookkeeping to tax services, annual tax, excise tax, sales tax, and then advisory services, virtual CFO type things like forecasting and cash flow management and things in that nature. We have a booth here at the conference. Feel free to come and visit us, especially for this conference. For all of our attendees here, we are offering, if you're a new client to Lance CPA Group, 25% off your annual tax return for 2020, or 10% off for monthly bookkeeping services. So if you're interested in that, please feel free to come to the booth or reach out to me. We'll have contact information here at the end. All right, so let's dive in here and talk about benchmarking and the importance of data in the brewery. I think when it comes to benchmarking, really regardless of what we're trying to benchmark for, this information is really important. That data that we have and that we need to have is really important. And as a result, we need to make sure that we understand our data, understand how it compares to others, understand how it compares to the industry at large, and make good decisions off of that. Some of this stuff can really bring some interesting information to light. It can bring some information about how we actually go about making pricing decisions and costing decisions, and understanding, do we have the right mix of sales in our brewery and things like that. So really the objective here with benchmarking is to really determine what and where improvements are called for, to look how you compare it to others and see if there's areas of improvement, and ultimately make better decisions for your brewery as you start to think kind of long-term, and even in the short-term nature, going forward here. And I think the big reasons why we see benchmarking work and really work well for breweries is it really helps them understand and make sure that what they're doing makes sense, make sure it's aligned with the markets, and really test to make sure that what they're trying to focus on, the trends in their KPIs, things like that, are actually going the way they should be going in light of other information out there. So one example of this, one of our brewery clients in Chicago, and we did some benchmarking KPI analysis for them, and really kind of compare that to some industry data as well as local data as well. And we found that with regards to their kind of revenue per barrels and COGS per barrels, they were lower than their industry average for revenue per barrels, and they were higher on the COGS side, which that's a bad combination. That's really going to really hit you in the bottom line, and particularly the gross profit margins. And so we dug into that and see what's going on. And so some of the findings that we had from that after doing that benchmarking, kind of seeing how they compared to others in the market and others at the industry in total, it really came to light that how they purchased ingredients needed to change. They were buying ingredients a lot of times last minute. They have a pretty decent sized operation, so they needed lots of ingredients, and buying things last minute just meant they're buying them at a higher cost. They were buying things through multiple providers, multiple suppliers, which didn't give them the best bang for the buck as far as as economies of scale. And then as they grew, right, they weren't getting the pricing that they should have been getting because they just kind of spread them out among, 15 different suppliers. And the other thing that came from that is just the pricing of their beers, particularly in their tap room. They hadn't changed their prices since they opened, 6 years prior. And as a result, obviously costs have increased over time. Their costs to run the brewery have increased over time. And they weren't, they're getting lower and lower margins as a result there. And so I'm just kind of even shedding light of like what a increase in price, even an increase in the beer price by 50 cents or a dollar, what that actually did, and even comparing it through the market and seeing that their price was on the low end compared to some of their peers, and they had room to move up in their price, and especially for the kind of product that they had there. So that's a really good use of benchmarking because they were able to make some pretty strategic changes in the brewery, and then as a result from that, we're able to increase the revenue per barrel, decrease the COGS per barrel, and that was really just money, down to the bottom line for them as a result there. So when you look to benchmark, you're going to need kind of 4 different things here that you need to look at. One is having reliable financial data from your brewery, making sure that you have reliable financial data from your peers. So, when you're comparing yourself to a peer, is that data actually relevant or not relevant? You want to make sure that you can compare an apples to apples there. Having reliable market data from external sources. So things like SCAN and IRI and Brewers Association, and even some state guilds provide some of that data that is useful here. And then taking and comparing this with some key metrics that you're looking at across the board that are really relevant and things that you have control over and can change in your brewery as a result here. So first, before we get into actual diving into the benchmark itself, let's talk about some of the sources and data because I think in a brewery, one, data is really important, but it's really disaggregated in your brewery. You have information residing in your POS system. You have information residing in your brewery management system. You have information in your accounting system, information in your payroll. And there's all good pieces of information there, but they're all kind of disaggregated there. So you want to kind of find a way to bring those together. And bringing that together by connecting systems together. So finding systems that integrate with each other allow us to some of that connected data. And by having that connected data, you were able to kind of capture that, process it, and analyze it much more readily and much more better. And by doing that, we're going to get better at managing the brewery as a result because we have such rich data that we're working off of here. So this is kind of a process chart, whiteboard chart here of kind of a flow of some of the data within a brewery through the different systems and how they capture data, how those systems integrate with each other, and all that data that's arising here, right? So there's a lot of things going on here. Basically at the hub or wheel, this is your accounting or GL software, particularly because it works as a good conduit of information and gather it from different places and with their integrations. And so this is kind of a layout for what I would say a typical brewery client of ours. You start with having your data either in Xero, QuickBooks Online, both cloud-based systems. All these are cloud-based systems, by the way. They work better with integrations. You can get more real-time information from them as a result here. So we start with our accounting software. We start to plug in the other softwares that we're utilizing. So on the taproom side, we're going to plug in Square or Arrived or whatever POS system you're using. On the brewery management side, we're going to plug in Ecos or Beer 30. Again, whatever system that you're using for brewery management, we want that integrated in and get that data in there. Our payroll through Gusto or whatever payroll provider you're using, T-sheets for tracking time and scheduling, have that integrated in. Using a software like HubDoc to gather information, documentation, bills, receipts that aren't necessarily, in your brewery management software, but are from just the operations of the business, being able to capture that. And then having a software that you're utilizing for some of your AP and bill pay, like a Roger or a Bill.com. So all these systems then kind of gather their data and push it into Xero and QuickBooks Online. And then from there, we're able to, get financial reporting and have a good set of data to work off of. So some of these things you think about your data sources and where data lies in there. Like the point of sale system, it's going to have a lot of good information about your sales by customer, who your regular recurring customers are, sales by product type, things like that. A lot of good rich information there. Your payroll system is going to have a lot of good information on your labor usage, trends, understanding who you're paying for what work and how that's being divvied up between departments in your brewery, or how you kind of divvy up your analysis of your brewery. Looking at things in your brewery management software. So in your Ecos or Beer 30, right? Looking at things like raw material costs, recipe management, wholesale sales, cost, and all that stuff. All that stuff is really good, detailed information that becomes really necessary to understand how we cost our beers, how that plays into our revenue, and ultimately leads to a healthy gross profit margin. We also need to look at data sources, looking at things coming from our bank, looking at things in our accounting data, things like trends, gross profit margins, net profit margins, particularly if you look at, kind of bringing everything together from your taproom sales to sales via distribution, to other kind of sales you may have, merchandise, events, things like that. All those are really good data sources. We want to get those together. So having integrated data really reduces the need of having manual or double input, which reduces your errors. And this also helps us with having a system that gets more real time. So those systems are feeding data to each other on a real time basis, and as a result, we can have richer data from that as well. I have kind of a typical tech stack here. Again, you may have your tools of choice that you utilize here, but these are tools that we find that work really well across the board with our brewery clients, and allow for much more richer data, allow for easier interpretation of that data, and ultimately lead to making better decisions in the brewery as a result here. Again, here's that kind of chart, the flow. Ultimately, we're trying to capture all that in together here. So let's look at some benchmark analysis here and talk a little bit through that. So again, going back to our checklist of what we need here. So first, we need reliable financial data from our brewery. That's the first check. Hope we got that. We need reliable financial data from your peers. So hopefully your peers are doing the same. With our clients that we work in the brewery industry, we all kind of treat those similar as far as the process go, to ensure that then we can compare that information from brewery to brewery, that we're able to do that. Next, we needed some reliable market data from external sources. And finally, then we need to kind of compare and analyze this with our key metrics here. So let's talk about that external sources. So I'm going to present some historical information, and then we're going to kind of throw that out the window because everything changed here this year. So historically, right, we're having about 4% growth year over year. Total beer sales are down, but craft is up about 4%, really driven by the kind of microbreweries and brew pubs and the smaller type breweries, not so much the regional ones. Same story. It was basically the same story for 2019 as well. Again, down overall beer growth, up again about 4% as far as the market goes there. And so the Brewer Association last did a benchmarking report in 2018, which they released in 2019. And these were kind of some key data points that they had from there, looking at what revenue per barrel was, COGS per barrel, and COGS per barrel, including direct labor. And we'll get back to these when we start to dig into some of the details of the actual benchmark analysis we did in June 30th of this year. But I just want to kind of put that on the radar here as we move forward. So then obviously COVID hit, right? And so that's changed the game for a lot of breweries. That's changed how they operate. That's changed how they're deriving their revenue. That's changed how they are trying to implement their goals. And so some of those growth data and what happened in the past, while nice, is not as relevant now, but still can point us in the right direction as far as trends go, and help us analyze, okay, what's actually happened compared to what happened in the past, to start to target some kind of issues that we need to address in the brewery, and make some changes now versus letting those issues stick out there and then we slowly kind of bleed to death. So I think one of the things that you have to step back first before we start looking at this is understand the strategy of your brewery. So as your brewery grows, and maybe when you started your brewery, it was just like, hey, let's get this off the ground and see if this is a viable operation. Once you got to that point, it's okay, what's your goal for this? Whether that's a year out from now, 3 years out from now, 10 years out from now, what is that going to be? Is your plan to always run the brewery like it exists today? Is the plan to really increase your growth? Is the plan to keep it in the family? Is the plan to sell this off at some point in time? What's the strategy? What's the game plan here? And when you think about strategy, it really comes to having compromise and intent. Strategy is really the indication of an intent to achieve goals. So if you haven't done goal planning or goal setting at all in your brewery, I highly recommend going through that process. This is a good time of year to do this as you kind of think to 2021 and forward. And even though things are still a little bit murky in the market, obviously we have no clue what winter is going to bring here and how that's going to impact craft breweries, kind of across the nation. It's still important to have these goals in place and have a strategy that's going to help us achieve those goals. A lack of goal really just means that we're starting to fight fires and chase the fires all the time, and we're acting more reactive versus proactive. And I think this is still a really good time of being proactive and being understanding of how does our brewery succeed in this environment and set ourselves up for success, so that when we come out of this on the back end, we're in a really good position to really capitalize on growth or capitalize on the goals that we want to have, versus being reactive, trying to fight every little fire and not having a clear strategy or goal where we're going here. We do an annual event called Unfiltered at CPA Group with all of our craft brewery clients and other friends in the industry that we bring in to this. And in that event, we look at benchmarking data and talk about kind of big picture items. And so when we did our event in January, so this is before everything blew up on us, we talked about the kind of the quote from Shawshank Redemption, either get busy living or get busy dying. And I think for a lot of breweries, even before COVID hit, they were kind of in this kind of middle ground of not really sure what they wanted to do, not really sure what their game plan was, and not really sure where they wanted to go from their goals. And even with COVID hitting here, right, that sentiment still holds true, right? The status quo won't help you right now, right? If you went through COVID and didn't change anything about how you operated, you'd probably be hurting a lot right now because you weren't changing to the changes in the marketplace, changes into how you sell beers, your channels, all of that, right? So there's always needs to be kind of a look forward as to what is our plan and how do we become an organization that is adaptable and survivable through this stuff. And that really comes back to having goals and saying, what do you actually want for your brewery, and pointing your brewery in that direction. And ultimately, then that strategy that you try to come up with leads into achieving those goals that you want to get there. So that, again, this becomes really important and critical. And again, if you have not done goal setting, I would highly recommend doing that now and start thinking about what is the goals of the brewery, what's your strategy to get to those goals. And when you think about this too, once you start to kind of point yourself in that right direction and develop that strategy, you realize that you can't do everything, right? Like you can't just throw everything at the wall and hope stuff sticks. You have to focus on things and make decisions, to do certain things and make decisions to do not do certain things. And we don't need to do all those things to achieve that goal. There are going to be a certain set of activities that we want to undertake or strategies we want to undertake to achieve the goals that we want. And understanding that some of those activities we may put into place take us away from those goals. So really then the question then becomes to you is, what is your proactive strategy for going forward? What is the things you're going to do to achieve that kind of business continuity, to achieve what you want to have happen in 3 years and 5 years? And this is still a time to do those things and make those decisions, because when you come out of this and when you change out of this, get past, kind of post-COVID, you still need to be set up and pointed in that right direction to achieve those goals. And if you look at a lot of the big businesses or businesses that have been super successful, they became successful because they were willing to make moves during a economic downturn, a recession, or when things, maybe, said, hey, I should stand pat and not do anything. Those businesses actually went to do something. And that's actually how they've achieved some of their success, because they made some of these proactive strategies, start to implement them when things weren't maybe the right time in the market because of a recession or downturn, but actually that ended up helping them because they were the businesses that actually started to move and operate in a new way. So let's talk a little bit about some current market conditions. You saw 2018, 2019 information. Obviously that's interesting, but that doesn't really help right now, right? And so I think for a lot of breweries, if you ask them how things are going, they'll say not great. But I don't think that's true across the board, right? So Brewers Association did a mid-year survey They looked at, okay, what's actually happening in the marketplace. Now, the survey was, people self-selected into it. It's not a random sample or anything like that, but the data is still interesting here, right? So overall, there's a revenue decline of 13% year over year. Now, if you include scan data, and so that's really going to be your off-premise sales, into this, really the data drop is only 6%, right? So a lot of the drop in sales happened, for on-premise, off-premise actually was, somewhat more robust or picked up some of that slack there. Now, in the survey here, a third of the participants actually showed growth. And that's actually pretty consistent with what we see in the marketplace too. So I don't think that is an out-of-line comment. That actually is about what we expect it to be. And then ultimately here, participants in the survey think that they believe the second half of 2020 will be better and have a 4% growth year over year. We'll see if that remains to be the case as the rest of this year wraps up here. But that was interesting data nonetheless. So kind of what we see in the marketplace and looking at benchmarking data and other data points across the board is breweries in suburban locations tend to have done much better than breweries in urban locations, primarily because people aren't traveling. I think Chicago is a good example of this, with everything kind of shut down and locked down and people working from home. There is far, far less people going into Chicago itself. There are less people traveling to visit Chicago, partake in things on the weekend. And as a result, those urban breweries, which kind of thrived on having all those people kind of commute in and be in Chicago, are feeling the struggle. Whereas suburban brewery locations are kind of the opposite there, because they're getting all those people who are stuck at home and getting their business where they may not have before. Breweries that were kind of really growing strong in 2019 are also doing well. I think that gets back to kind of, figuring out what their goals are and delivering on that strategy and continuing forward there, right? So those with strong, kind of a push from 2019 into 2020, again, fared better than those that didn't. And then breweries that were able to quickly pivot. So making those changes, going to sell, delivery to go, focus on that for their on-premise side of things, make sure they fill their distro channels, those that better. Now, some of the things we also saw in this revenue growth does not actually mean net income growth. There's lots of extra incurred expenses that happened, from higher packaging costs to cost of sanitation and equipment to make sure people are safe. And so that really kind of pushed that bottom line down a little bit. And you really see this in the higher COGS. So once I show you that data, that you'll be real evident there. Like I said, breweries that stuck to their goals did much better. Ones that kind of here's what we want to do for a brewery, did better, right? We're seeing breweries that have opened during this time period, breweries that have opened second location during this time period, and are still thriving because of that, and seeing some great success there. All right, so we have a reliable market data. Now it's time to look at some of the metrics here. I'm going to caveat some of this data here, just because, this is kind of a point in time as of June 30th, 2020. We're trying to compare apples with apples the best we can. Some breweries, that provided data, maybe they handled their data a little more unique way. And then as a result there, that information is quite apples to apples. So we made some adjustments to get there. In our, one of the caution notes in here as well is in COGS, when we look at COGS, we're just looking at direct materials costs in there. So we pulled out any allocations of labor and overhead, just so we can kind of get, a standard across the board, because not every brewery handles that in the same way. And this is also a point in time. This is as of June 30th, and really focusing on that January through June 2020 time period. Metrics will change and shift throughout the reporting periods as a result. And so, this isn't the, what the numbers will be forever. It's just this period of time. Some high-level notes here. Average revenue drop was 3% in our benchmarking group. The benchmarking group, by the way, has about 25 breweries involved in that group. Those breweries range in size, range in their operations. And so in some of these metrics too, we kind of break them out based on different size or different ways they operate, just for, again, some more apples to apples comparison here. Revenue per barrel is basically flat. It increased the dollar per barrel. So I think some people might look at that and say that's good, right? Like, we kept revenues the same. That may also not be super great when you think about the higher cost, right? So they didn't capture or change their prices to reflect the higher cost and basically end up eating it, which then leads to a lower bottom line as a result there. And then, obviously COGS per barrel increased significantly, really, really due to packaging cost. And the additional cost there, right? So the average cost per barrel was $189 when we did this for the 2019 year. That went increased to $224 per barrel. So a significant increase in cost there as well. So again, a couple high-level notes here too. The volume of beer that was sold and decreased in this group, right? So I think that's pretty standard across the board. So there's less volume going through or less throughput going through the system, and then we have a higher cost to do this. So as we look at that, we want to make sure to keep those items in mind. So the first metric I'm going to give you here is revenues per barrel. So each one of those dots represents a brewery that provided information for the barrelage. This is simply looking at your total revenues over total barrels sold during the January through June 2020 time period here. In this, the smaller dots represent smaller breweries, bigger dots represent bigger breweries. Just again, you get some context here. You kind of see a couple of break lines there, one around the 1K line, another kind of in that 750 line. And this becomes a little bit more evident when we look at this, right? So like I said before, revenue per barrel has kind of stayed static. So people didn't really shift there. But if we go here to this next slide, this kind of breaks down breweries between breweries that were distribution heavy versus taproom heavy. So what I mean by that is if more than 70% of your sales come from on-premise, you're going to be in that taproom heavy box. If more than 70% of your sales come from distribution or off-premise, you're going to be in that distribution heavy box. And then if you're kind of in the middle, you're in the middle right there, and we call that mixed. And as you see here, I think the more interesting part here, usually when we look at this, all the dots are kind of in the same area. There's a little bit more spread here as a result. I see, like you see one taproom heavy brewery that is way, way, way low. And so that's an area of, okay, what happened there? Why their revenues dropped per barrel that they sold. So that's an area of concern there. But you also see a pretty, really kind of a pretty strong, line there where normally when we do this, they're all kind of bunched together. So again, this may depend on their strategy. So some of these taproom heavy breweries may have to have shifted to going, full distribution and didn't have any real on-premise sales or any to-go sales. And as a result, that really pushed the revenue per barrels down as well there. So you see a kind of a shift there. Some of the breweries that kind of stuck with, we're going to do on-prem. We're going to be focusing really on that to-go delivery and pushing product that way versus some that went to the, all right, let's kind of abandon on-prem and let's try to self-distribute or get this into the market in another way and really push more towards that distribution line. COGS per barrel is another big one. Like I said here, again, a huge variation here. Typically, we don't want to see COGS per barrel, especially looking at direct material cost only above that $200 per barrel mark. That's kind of the Mendoza line here of we want to stay below that. Now, in normal circumstance, most breweries would be below that. Obviously, this year, that's not the case. Again, a huge push, and some are now pushing over that 300 mark in cost there, right? So we're taking, and again, I'll show this in the, oops, that's the wrong way here. We're kind of seeing this in this kind of in this split here, right? So obviously that is going to be a huge push or hit towards your gross profit margins and your profit margins in general. Gross profit per barrel, obviously, then we see that kind of shift there, right? So there's a lot of breweries at that 1,000 mark that would have been like in the $1,400 gross profit per barrel or $1,200 gross profit per barrel before pre-COVID, or now that gets pushed to that kind of 1,000 mark, and then you see some that are just again significantly lower there. And you look at this again in the splits, we see similar kind of splits between those groupings there. But those, especially those taproom heavy ones, much less than it was in 2019 and 2018 as a result there. One metric we look at a lot here is net variable cash flow, which really looks at all of your variable costs. So not just what's in your cost of goods sold, but every variable cost you have in operating expenses, and says, okay, for every dollar of sales you get, what really can contribute to your fixed expenses. This also is known as the contribution margin. And again, in this case here, we're seeing again a push or shift downwards here because of a higher variable cost that were incurred during this period of time. Cash flow margins, again, we want these above zero. If it's below zero, that means for every dollar of sales that we have, we're spending more money than we're taking in. Again, this has been shifted down significantly as well. And some breweries kind of on the far left there have been struggling much more as a result. So kind of some thoughts here and things that we're thinking about. So what are we thinking about? What keeps us in the game for the future? What are the strategies and growth options we can put in place now that gets us to where we want to be? We expect winter to look like early lockdown period. So December, January, February this year may look a lot like March, April, May. So how are breweries going to cope with that, particularly in the colder months? So we're seeing some breweries, try to invest in some sort of way to continue to have outdoor dining, particularly up here in the north, where there's going to be some additional need for heat lamps or things like that to make that viable. And then the other thought is kind of what metrics do you need to have that tell you're going to reach for your success there. So we look at metrics. We look at one or two types of metrics, right, to focus in on, and not just look at all those metrics and try to focus on all of them. So pick one or two, right? So for a lot of brewers right now, they're looking at that cost of goods sold margin, seeing, okay, what can we do to reduce that down? Or do we have to then make the decision of increasing our prices to make up for that as well? This is a strategic activity. We want to take what we know intrinsically and what the data shows to come up with that strategic plan. And really looking at in terms of goals in kind of a 1, 3 year, and 10-year goal period. And then watch these metrics over time, right? So these are all point in time metrics. While interesting as compared to others, for you and your brewery, you want to look at that in a trend line and see how those are trending. And if those are trending not the way you want to, now is the time to look at how you can shift that trend line the other direction. A couple things else before we wrap up here. If you go to our website and go to our craft brewery page, you'll find our 4-pack. It's kind of our strategy guide for breweries. You can download that there. It's a free download. So highly recommend that you grab that. It's a lot of good information in there. Unfiltered. We're going to do this event again in January. We'll have some information on our website up here shortly as far as the dates and times for that. It will be virtual. So anyone across the country can come to that and even contribute data if they so choose. And then with that, I'll take any other questions here for the remaining minutes that we do have. Our contact information is up here. If you have any questions, comments, want to talk about this more, please feel free to reach out to me at josh@lancecpa.com. I'd be happy to, again, answer any of those questions that you may have. You can reach us on our website, lancecpa.com. Again, that's where you're going to find information for the 4-pack, where updated information will be for our unfiltered event in January, as well as some other good information we have out there for craft breweries, as well as some resources, especially regards to PPP loan forgiveness, which I think a lot of businesses are starting that process right now and trying to figure that out. So if you have questions on that as well, please feel free to reach out to us. And with that, I'll see if we have any questions that have come in here. Please feel free to drop any questions you have into this. Otherwise, if you can also shoot those questions to me, happy to answer those for you. And again, for all attendees here who will be new customers to Land CPA Group, we are offering 25% off our tax prep services for 2020 for attendees, or 10% off monthly bookkeeping services. So if you're interested in that as well, please feel free to reach out to me again at josh@lancecpa.com. And with that, I will again leave it open here for any questions that come in. Otherwise, we will wrap this up and finish up here. I got one question here about pricing. So I think that's a topic that I don't think a lot of breweries look at. And if you talk, as we talk to breweries and think about what they look at from a pricing standpoint, it really their pricing is being like, okay, what are my competitors charging, and I'm going to charge something around there, and that's not a really great way to price. I mean, that's a good piece of information, right? You don't want to charge $12 for a beer that everyone's charging $6 for, unless you have a really good reason why that's a difference there. But I think you have to look at pricing more strategically and start thinking about, like, okay, what is our value that we're bringing here? Understand our cost, right? So if you haven't done a good cost and analysis of your beer, again, using softwares like Ecos or Beer 30 to do that, that may be a place to start to see, okay, what are the different costs with beers, right? And I've seen this when I've looked at some breweries here where they, where they look at, their price and they charge the same price for an IPA that has a much higher hop bill than like as a golden ale, right? And obviously when you look at the beer costs in there, there are going to be big differences there, particularly on the hop side of things, but they're not picking that up in their price, right? So at that point now you're kind of just giving away, that added value for free. And so thinking about how you do that pricing, how you strategically up your prices. I think, again, people are probably fearful of upping prices because they think they'll drive people away. I tend to believe that more people, people don't necessarily care or as too price sensitive about price for craft beer as other things. And so looking at things like increasing your price, let's increase your price by 50 cents a beer, right? Or $1 per beer. What does it actually mean to your bottom line as a result there, right? Or is that, does that actually cover some of the price increases that you have, or some of the costs that are higher for your beers than other, right? So I think looking at pricing strategically, especially in an on-premise where you can control that much more than you can than off-premise is, I think, pretty critical. And something that probably brewers need to spend a little bit more time focusing in on and having a good strategy there. Because I think that's where, if you're underpricing your beers or not, increasing your beers as the cost increases, you're just leaving money on the table at that point. And that money, that, little increase in price is really just straight to the bottom line for you at that point. So I think that becomes pretty critical. So, are there anything else, questions that come up here? I'm not seeing any, but I will leave this open here for a bit. Again, thank you everyone for joining us. Contact information is on the screen here. Feel free to reach out to us, and we'd be happy to answer any questions you have. If you want some of the data from our benchmarking survey, again, please reach out. We're happy to provide that as well. All that benchmarking data is anonymized, so what you see, even if you gave your data to your brewery, is only going to, you're only going to see where your dot resides in that list. You're not going to see who the other breweries are per se, because we do want to keep the information anonymous and secure. Again, let me know if any questions you have. Thank you for joining us, and with that, we will wrap it up.